Hello, this is Steve Wiseman of the Peterson Institute for International Economics. I'm here today, November 2nd, with Joe Gagnon of the Peterson Institute to talk about the announcement by the Federal Open Market Committee saying that the economy continues to strengthen. But of course, all these statements are read like tea leaves. And Joe, what are the tea leaves telling us here?
Well, they're telling us very little news, no news today. The statement was exactly as expected. The committee said that the economy is evolving pretty much as they had expected in their last meeting in September. And most people are expecting they will make a move next month in December. But they said they weren't quite there yet.
A move to do what?
A move to raise rates. And the committee said they were not quite ready to move rates this time, but that things seem to be moving in that direction, and everyone expects December will be the time.
What would be your expectation for the amount of the increase? From what to what?
I think in December they'll raise their target from 0.5% interest rate to 0.75, a quarter of a percentage point increase in December.
And what does that mean? That they're confident that the economy is growing fast enough to accommodate that even minor rate increase?
Yes.
And what did we learn today about how they view the employment situation in the United States?
I think they're pretty happy with it. The unemployment rate is about where they want it to be. Interestingly, there's actually more jobs being created every month still than we can sustain in the long run. There's actually more jobs being created every month than there are new working age people in the country. What's going on? Well, a lot of people who are out of the labor force who haven't been looking for jobs have started looking for jobs again. They're starting to be counted as in the labor force. And so the labor force is growing, allowing them to have to take these new jobs. That cannot continue forever. But they're happy with what it's doing, and it's reducing this underemployment that we've had for a while.
I hate to ask a dumb question, but sometimes those are the most fun.
Mm-hmm.
Why can't it go on forever? That we create more jobs than there are people to fill them. Yeah, what's so bad about that?
Well, I mean, there's nothing bad about having people have more taking more jobs, but obviously we can't have more people working than we have people. So,
I mean, I guess what I'm really asking is then inflation becomes a danger, or what?
The worry would be that if there were lots of job vacancies that couldn't be filled and businesses were desperate to fill them because they had so much business, they might start raising their prices more, right? Because if they can't produce more goods to sell to you, they'll try to raise the prices since people are banging down their doors to buy their stuff. So that would be a nice problem to have, given where we've been for the past few years. But
Sure.
Ultimately, people are not happy when we have too much inflation.
Right. So the economy is growing at this steady rate, positive direction. How long can that last? Can that last for another year, 2 years, 3 years?
Well, the economy can grow forever as long as we have some growth in the population and we have some increase in our technology, ability to produce things, both of which have slowed, but they're not below zero. I mean, we do have some improvements and some new workers. So that can go on forever.
I guess people are always worried about the next recession, so that's why I'm asking. Can we be relaxed about that?
Economists...
That's not a dumb question, but it's a tricky one.
It's a tricky question because economists are very bad at predicting recessions. No one, we don't have anyone who's got a perfect track record in predicting recessions, and most of us can't have a bad record. They say about a 20%, we say about a 20% chance that there could be a recession next year most of the time. And we usually don't see them coming. So, so yes, we should worry about a recession, but I don't see any particular reason. I don't see any obvious thing that you might worry about. And in the past, sometimes there have been such obvious things, like if inflation's very high and the Fed might want to fight it. Or if the housing bubble, if the housing prices are overinflated and they're going to come down and people won't be able to pay off their mortgages, that could cause a,
Sure.
So we don't see things like that, but that doesn't mean that there's not something out there.
Right.
I think international things would be the big risk for us.
Such as a crisis in
Such
Europe
as
or
China,
somewhere, China,
a big meltdown in China,
Yeah.
and then they stop buying stuff, and or in Europe or anywhere really. Yeah.
Well, on that uncertain but perhaps hopeful note, thank you very much, Joe.
You're welcome.